Friday, August 2nd, market analysis, Stan Ehrlich. Well, as you guys know, I start out with the indexes, go to futures. Lately, I've been including Bitcoin, BTO. Here we are, totally a new low ground for 2 months plus on the E-mini S&P 500 September contract. Significant downside breakout. Support tried to hold for a couple of days relatively successfully. Had a nice rally, and the FOMC meeting announcement helped or caused it, depending upon your perspective. But as I am looking for, and I still do, I'm looking for a significantly lower. I don't want to call it a bear market. It's going to be 2 months and a half, maybe more. And I think we're going to go all the way down to about 49.20, give or take. This green zone down here. And we're looking at support and resistance on various indexes, essentially because of the range that happened back in December, January. But it correlates fairly well with a lot of indexes to be support and having been proven to be. And it's a significant amount lower than we are now, which could be accomplished in about 2.5 months to get to the October lows, which I will start detailing historical information. You know, it's likely, well, it has happened, put it this way, over 90% of the time and then since 1997. That's a hell of a track record. New low close likely by a large chunk, blowing away support in the E-mini, and we're going to get the same kind of stuff and everything across the board. Here is the 30-minute, half-hour chart. I had to expand the time frame. Usually I show 1 or 5-minute charts because look how far back you've got to go in order to find where the market's been, and that would be beginning of June, like June 1st. So support starts now at 52.67, and I wouldn't put it past it to get there today, although I kind of doubt that, and I'll show you why in a minute. There's some bottoms maybe forming. In fact, I'm looking at the other screens here. I better get to it right away because it's coming up. Okay, so with the 30-minute data, you can't see enough detail really to show you what I want to show you in a minute. But it is bouncing a little bit. You can see that. Up to resistance, back up to the yellow zone, very plausibly, and I'll show you why in a moment. The yellow line that I have drawn today is equal to the size of the break that we had, which bottomed out at the end of July. You take that same stick or measuring tool, and you find that from this rally high, only yesterday has already reached the sizable break that we had over, looks like about a week and a half, maybe close to 2 weeks, and we did it in 2 days. That's got to tell you something about momentum. It's got to tell you something about the backbone of the market at the moment. Okay, obviously I'm bearish and have been for, well, weeks, basically. Now, I'll erase that line just to point out how big of a break this has been. We're going to go to the spider. We almost had a sell signal on top, not quite, but we did on the DIA, the Dow Jones, the YM, and the NASDAQ. You'll see in a moment. So, overbought conditions, topped out, sell signals, some didn't work very well or at all. But we had a bearish engulfing yesterday. I pointed it out at the time, and bam! You guys know bearish and bullish engulfings are one of my favorite tools. Support and resistance, variety of other chart formations. So guess what? I think this looks a little bit like a head and shoulder top. There's the shoulder on the left, June 20th. Top of the market is obviously July 16th. And yesterday's high may have been the last shoulder high and a breakout to the downside with a gap today. The neckline does slant down, and I'll draw it in for you very slightly over time, right about like that. And today's high is right around the neckline. If this is all true, I can come up with an objective for you pretty accurately, very quickly. I didn't do this before. I should have. Sorry about that. This is going to be off a very small amount, 51,510. That's my downside objective on Spider, SPY. From the pattern bearish expectation, my real downside objective could be all the way down to 477. Enough said. Next, Spider, short-term, 5-minute, dropping fairly quickly. Now, this doesn't have the pattern I'm about to show you. Only the 24-hour version, the E-mini, has that pattern, but I'll show it to you on the QQQs in a second, or in the NASDAQ chart, NQ. Gap down. Gaps are almost always closed. I wouldn't be surprised to see it come back up to about 455 and then down, down, down. My longer term, 2.5 months from now in October objective is 413. Maybe even as low as 396, but in the green zone. Basically at or below the lows we saw back in April. Next chart. We've got a 15-minute QQQ. Obviously, it broke support levels. Coming down to the next one, short term, next few days or week, 436, maybe 433. Qs. Next. Now, the daily data for the NQ, downside breakout, even broke the lows that we made back on May 31st. And now we have seen the lowest lows since May 9th. That's 2 months, 3 months, almost. Not particularly a bullish comment. We have a sell signal on the exact high day, July 11th. We just got stopped out of our shorts, both ER1 overnight and ER3 overnight, both of them, 2 days ago. Unfortunately, we're out. I'd like to be short still, but that's not, I meant this is the trading system. You're not supposed to inject any commentary, essentially. And I am very happy with that trade. Don't cry over spilt milk ever. Just minimize your losses and let your profits run. NASDAQ, 1-minute chart. Now, here we go. California time, 5:36 this morning, when the news came out about the unemployment that caused the break. Well, I think it was 111,000, which was a disappointment. Caused the break, new lows, bounced back to resistance. I think that could be a little shoulder low. Very small formation, only a few hours in size. But look at this. Later, we had the head of the formation. It took maybe an hour and a half. And it's that trading range right in here. This is the last shoulder low, maybe. It's already starting to head back up toward the neckline, which is slanted downwards rather substantially, but acceptable. The minimum upside objective, again, on a very small, tiny pattern, if it works in the first place, I'm a little skeptical, but so far so good, would be up to 18,950. We could say 19,000 is a round number. That's pushing it a little bit more than I expect. 18,950 is actually more accurate. So what does that get us to? Not really very much. It only gets us back up to where we started out last night, yesterday afternoon, yesterday's close. I'm sorry, that doesn't do it for me. That's not bullish enough, strong enough, quick enough, etc. And I'm also skeptical on whether it's going to work in the first place. Next chart. The YM Dow Jones daily data, I have to look at a long-term perspective here now because of these big moves we're having. Doesn't have extremely good support until it gets down to, let's call it 375, maybe even lower than that. But that would be my lowest expectation at this particular point. Seems to be relatively close, but I'm going to stick to 37.37. That looks awfully good. Probably should put a yellow zone in there. Now, shorter term. We got the top day. We got the high day exactly to the day on an ER sell signal July 18th. Bingo. Market did rally up quite a bit, and my system only made about 5 days worth of profit and actually got stopped out July 25th. And now finally, we're lower than we had gotten out. And of course, I can change my kickers, which is the speed at which my stop moves, which is the yellow dotted lines. so that I could have survived that rally. But that would be an investor type stop, a long-term type stop, which is fine for, people who are planning to hold the trade or hoping to hold the trade for many months. I'm a, short-term trader. Enough said. New lows for a couple, 3 weeks or something, approaching some support on the Dow futures. Let's look at the Dow futures. Remember, this is the 24-hour market. We're going to see that bottom formation, and this is a 5-minute chart. Now let's spread out the data so we can see it doesn't even have it. So not on the Dow futures. All it did was just break down like crazy and bottom out just recently on this 5-minute chart and bounce. Oh, let me make an exception here. I am apologizing. This is a very, very lopsided head and shoulder bottom, and I can't call it that because this would be the first shoulder, 540, rallied, head way down here, not a good enough rally. That should have been right up into this zone in here, so the neckline would have been relatively flat. No way. So this doesn't really qualify. Sorry. Next chart. Russell Index came up in the last few weeks to major historical yellow zone resistance area and in overbought conditions topped out, unfortunately, one sell signal in the middle, but not the highest high of the topping out time frame, which is about 2 weeks. Happened, but the signal didn't, work like I expect them to. But I keep mentioning to you guys that they are frequently part of the tops and bottoms and not necessarily the highest high or lowest low. Last 2 days, yesterday and today, crashed and stopped at the support level I've drawn in here for many, many months, maybe over a year, and stopped so far. And ain't going to stop it. I frankly feel very worried that it could come all the way down to 1773, the historical major long-term support. Now, there's some other levels in here. I'm going to say, yeah, not too bad. 1950 seems much more reasonable, and I'll block in some kind of a line later. Here we go with the short-term chart, bottom of support, bouncing a little bit. I don't think it's going to go up very far. I don't think it's going to last more than a couple, 2, 3, 4 days at the very most, not very far up, and new low ground any old time. Right away, maybe. Bonds, way different story. Rallied very sharply today, huge. One of the biggest up days in a long time. Bumped into some resistance areas and moved above a particular bullish resistance line it was trading below, but it blew through it today. But I don't know if it's going to, stay there. Let's see what happens on Monday and by the close. Now, it's overbought 2 days in a row and substantially so. And as a result, I think prime target to maybe hit 126 real soon and then flip-flop. Now that flip-flop back down again could get all the way to this bull trend line. So I'm calling it 117.18, but I do think there's a chance. Watch this. We had a major bottom way back in October of 22. Then we have the bottom of the market, which we get on the ER buy signal at the lowest low historically, October 23rd of last year. That's the October low in interest rates also. Stock market does the same thing pretty much. Now, if you take that time frame, which happens to be a year, October to October, you get, guess what, October, which is 2 months and a half on the average from now, overbought at the moment, major historical resistance coming up to at the moment. And I'm thinking it's going to zigzag its way down sideways to a little bit lower, not too bad, maybe a little bit below 114 in October and go up. 10-year notes. Absolutely the same commentary overall. Overbought, resistance, about to turn back down. Next, crude, new lows. I'm going to speed things up. New lows, new low close for a few weeks, couple of months, as a matter of fact. I think it's going to come down and hit 70.96 for 2 reasons. Previous lows in May, and it'll be a bull trend line in right now. Next, natural gas. Finally fulfilled and is now exceeding my minimum downside objective from the double top formation that I talked about most of June and all of July. Okay, done deal. So I'm not sure how much more it's going to go down, but I don't see it stopping quite yet. Next, heating oil, almost exactly the same commentary, except I've got big support below the market. So it may stop right at previous lows at 2.28 or even a little bit lower than that. We got a sell signal smack dab on top and close to the top and on the top. Next chart, gold, now an outside down day, bearish engulfing on gold. When today's high was very close to that line that I've been pointing out ever since it approached it, probably in the middle of July, I started talking about it when it got overbought and hit the line. Again, it's almost doing the exact same thing, except it's not overbought and it didn't hit the line quite exactly. Go close enough. Bearish engulfing, I think it's starting to go down, minimum 23.97, possibility 23.49. Oh boy, we have a bearish engulfing in the silver. Remember, this is the head and shoulder inside a head and shoulder. I've been talking about it for weeks now. The last shoulder is a small head and shoulder top. Its downside objective was 29.40, and it got there in 2 days. But that pulled the trigger on the big head and shoulder top, which has a head little double top right there, and a shoulder on April 12th. Its downside objective is still 24.085 or lower. And we have fulfilled the obligation, so to speak, of the rally about halfway or all the way somewhere in this zone to get back to the neckline on the big formation. And for Christ, we have a bearish engulfing outside down day. Now, I wished it would turn into one of my major bearish signals, but it's not because we're not overbought. Otherwise, it would have perfectly. That's it. I think the rally's over. I think we're about to make new lows and head toward the next support area, 26.92, down to a little bit lower than that, 26.24. Next chart. Okay, platinum. Everything I said about gold is true for platinum. Of course, the prices are different, but the formation is the same. There are very few differences here. This rally came up closer to its neckline, still qualifying. New lows for a couple, 3 days. I think it's about to make a new low for the move down since it broke out of the head and shoulder top. Minimum downside objective and lower than that, maybe 807.6. And we're 96 right now, and I'm calling it 807. Wow. Big move down. Next, high grade copper. I think support's about to be tested again and not holding. So I'm expecting it to break this yellow line. Next move down, 3.7. Next chart. Now we're going into grain, beans, oil, meal, corn, wheat, hogs, cattle, and then Bitcoin. Well, you guys know I've been bearish for a long time, months, in grains in general. Only soybean meal hasn't really come down as much as I expected, but everything else has made new lows for weeks and months. I can't say anything different. All I can look for is minor bounces up to resistance levels and then new lows. Exactly for bean comment. Meal, for the first time coming down, this is soybean oil, has broken the lows since May. A larger bullish formation I have abandoned a week ago because of the lower lows. We haven't got a close below all previous lows yet, but today we are going to potentially close below all previous low, except for one, low closing prices. So, it could do it any moment, any day. I'm looking for a lot lower meal. Here we go. Minimum downside objective not yet fulfilled at 305.7 because of the double top formation, the creation of which we have a sell signal on the second high to the exact high day. Yay. And I think we're about to stop rallying, and it is a little bit today, and go down and challenge and get to my objective and challenge the support area and maybe even go down a lot lower than that. Next, corn did all of that at the end of June. July, not even a buy signal would help it go up. Hardly. New lows the last few days. Could bounce a little bit more. Not much, not very long. Bearish as heck. Next, wheat, everything well, no, not quite. Wheat has had some buy signals. First two didn't work. So far, we've got a buy signal on Wednesday of this week, with Thursday being up, and today is up again. Not a lot. So I'm not liking the way this is getting started, but we do have a profitable trade in progress, ER1 overnight. But our stop probably could be some massaged a little and probably raised up a little bit. Tightening the kicker would not be necessarily a bad idea. I always have my defaults, but I'm letting it go on my default kicker right now and just waiting. I don't have much elbow room from where I bought it to the current tick, so I certainly don't want to raise it too much. Next, cattle. Wow. Support didn't hold whatsoever. We dropped right through it, but we're bouncing pretty good. Back up above the support zone. And I don't know, we're oversold at the same time as well. So I think we could bounce a little again. This time we're going to go up to 186. Yeah, I think that is very plausible. Hogs, Miss Piggy, overbought in resistance a week ago, topped out right smack dab at a previous high. Classic. So you got previous price range resistance, you've got a zone of resistance, and it, okay, stop that, please. Okay, thank you, lady. I think you may have heard that, maybe not. Anyway, I think this rally is over, and I think it's about to turn down again. And lastly, Bitcoin came down to close some old gaps yesterday and is showing flat market, down 0.04, nothing. Not any particular sign of doing anything I can comment about, except an old gap is closed and it may develop into a double bottom, possibly. And we did gap down a lot yesterday. So that gap up above the market now should be paid attention to. I think we're going to go up to 22 again and maybe 22.60. Let's see if the E-mini has done anything bullish here. Remember, I was looking for a rally to come around. Nope, nope, nope. The NASDAQ short-term 1-minute chart has made a low lower than the shoulder I thought was in a good place. Watch out. This could challenge the low of the day so far and make lows lower than we have been already. And I have to point out that we are a chunky 12.5 points lower on the spider right now. So, wow. You have a great weekend. Profitable trading to you.